With the market's recent weeks of recovery, it's got many wondering, are we back for real or is this another bull trap? Well, at the time of shooting, Bitcoin hasn't broken its all-time high just yet, but it has already posted an all-time high weekly close just above 106K. That's an early technical signal for bullish momentum, even if price action is still consolidating below the peak. Even if prices have changed by the time that you're watching this video, let's break down the bullish and bearish cases and what you should watch for in the weeks ahead. First, some seasonal context. Summer months are often slower for crypto markets, and sell in May, go away is a phrase that you'll hear thrown around. But we haven't followed the typical seasonal script so far. Normally, Q1 is strong. In 2025, though, Bitcoin trended down for most of Q1 and only began recovering through Q2. So it's hard to lean too heavily on historical seasonality this time around. The other factors, such as macro, are likely driving the market more this cycle. Taking a look at Bitcoin's technicals, a golden cross is approaching, where the 50-day moving average crosses above the 200-day. Now, by the time that you're watching this, it'll likely have formed already. Looking back at recent history, golden crosses have often occurred mid-uptrend and signaled continued rallies. Now, this is in contrast to death crosses, which tend to trigger panic, leading to a final flush, which is often marked local bottoms. As always, though, technical signals aren't gospel, and we are flirting with a key resistance zone. If we blast through all-time highs and see sustained daily closes above it, betting on continued momentum makes sense. But if we do get a pullback, the 93K zone will be the one to keep an eye on, which aligns with Bitcoin's bull market support band. In past cycles, holding above the BMSB has often kept the overall trend intact. Bitcoin may be back at all-time highs, but altcoins certainly aren't. Most smaller cap coins are still close to their lows and are still in downtrends against Bitcoin. While some have or are starting to wake up, it's still early, and the overall altcoin market is still lagging significantly behind Bitcoin. Now, we've been talking about a potential reversal in Bitcoin dominance for months now, but so far, that reversal hasn't materialized. Bitcoin dominance only recently made a new cycle high just over 65%, and while that has renewed calls for alt season, it's probably wise to stay cautiously optimistic. Historically, stronger altcoin rotations don't begin until after Bitcoin dominance peaks, or the Fed ends quantitative tightening. With ongoing QT, it means that liquidity is still being drained, not good for altcoins. While there's still certainly a possibility the top is in, we probably shouldn't be betting the bank that the top is in until we actually see lower highs and lower lows formed on Bitcoin dominance, and we wouldn't be too surprised if that doesn't happen until the Fed starts expanding their balance sheet, i.e. quantitative easing. Aside from the key chart levels mentioned earlier, there are also important macro announcements to pay attention to. The ones coming up the soonest are in the first half of June, with the US jobs report on June 6th, inflation data on June 11th, and the FOMC meeting and interest rate decision from June 17th through the 18th, which is currently projected to be held steady. Any surprises here, especially in inflation or the Fed's tone, could shift crypto sentiment fast. Inflation trending lower or even a slight dovish tilt from the Fed could light a fire under risk assets again, and unfortunately, the opposite may also be true. Bitcoin is showing strength, but it's also at an important crossroads. Seasonal uncertainty and ongoing QT may mean it's not all green lights just yet, especially for altcoins. So if you're trying to position in the market, it's less about guessing the exact top or bottom and more about managing risk as you ride the broader trend. Stay informed, nimble, and don't fight the trend or the macro. Let us know in the comments what you want to hear about next.